This is your weekend market recap for Saturday, May 7th, 2022. Let's get into it. Hey everyone, this is my channel to help investors and traders develop a probability-based mindset to succeed. Also try and keep friends informed of what's going on in the markets and the economy, and also a little real estate content as well. This is Dan Max at EXPI Realty, aka the Trading Agent, and this is your weekend market recap for Saturday, May 7th, 2022. Let's get into it. Again, if you're newer to the channel, which a lot of people are, and a lot of people who are following, please stop by the Discord room. Link is in the description below. Even if you're not involved in the chat, this is where I keep all of the content from which we reference, whether it's education, reference articles, like specific rules, reading, all the back to basic videos. There's a lot of education. Again, it's all free. Come check it out. If you have any questions about this video, please stop on by. Don't be shy. I'm always here to help. And if you have any questions, let's chat. On that note, we are going to switch up the order a little today. We're taking some names out and adding some commodity names in. It's very obvious long term we're in a commodity bull market. I think certain names are dead money, which meaning I don't think they're going to go anywhere for a long time. So if you study the past, which we'll get into again, this is the weekend recap. It'll be a little longer. We'll get into some of the reasons why I'm telling people to stay away from technology for the long term. It's not really in your best benefit to play in these spaces, because if you study the past, you realize there's really nothing new. It's all repeating patterns in history. So on that note, let's get into it. Starting on Bitcoin, what did we say? Said did not like the setup. Felt like left shoulder, head, right shoulder, and a lower right shoulder. And look what happened. We broke the trend line. Again, ultimately, this is all technical based on probabilities. Once you broke the trend, what do we say? 35,000 area. So far, we are holding. Bulls, you need help here. Now, again, a lot of people, because I don't know how to price Bitcoin long term. I know it has value, but I don't know what the residual value is. Something like commodities, I understand a little better. Stocks, I always tell people, again, valuations, I don't trust those long term, again, because I've seen stocks trade at less than their book value or, severely undervalued at times in certain times of the market. And so how do you value Bitcoin? Your guess is as good as mine. If you do have an idea and you want to talk about it, again, stop by the Discord room, because there's a lot of people who I know own it, and I'm trying to look out for them, because if 35,000 breaks, your next level is 30,000, and if 30,000 breaks, I have no clue where this thing goes. I know Bitcoin is susceptible to monster corrections. You tell me. There's other people who are smarter traders of Bitcoin than I have, because I've never been much of I wouldn't say a believer, because again, I feel like that makes it sound like a cult. But could it get back to 15,000? If so, that's a big drop. All right, let's get into the stocks, because this is where the money is made. The bond market. So people are like, oh man, you took a stab at bonds in the 120s, 130s area, and you got stopped out, and you really haven't said much about it. Yeah, because my trade's lost. And again, if I'm losing and I see a trade that's not working, I will eventually take my medicine. Again, anyone who promises you certainty and says that, well, I never lose, well, then they also don't win, because that's trading. Trading is a probability game. I know long term my win percentage is between 80 and 90%. It's the 15, 10, 20% losses that are the hardest, and you just have to be cognizant that you can be wrong, and you know your losses. Well, Friday, I started nibbling back into the TLT, very small. I consider it what I call a feeler bet. As Livermore would say, you don't know until you bet, and I tell that to people. And that's where in a probability trading game, and the style of trading that I promote and recommend is not all or nothing. All or nothing trading is gambling. So we layer in. One of the things I was noticing, if you go check out the 10-minute, again, this computer's charts have been crap. I saw it at the end of the day on Thursday. Somebody was clearly buying. Look at the volume. Then I noticed during the day, somebody had stopping power, because bonds just were going boom, 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 getting sold, which means high rates. Someone started buying. So again, I started a feeler bet at 113.60. We closed at 113.67. I noticed this action, then we popped back. Now again, this just starts this again. If you were familiar with volume price analysis, I am not familiar with anybody who can do this stuff without reading the books. Again, if you have the Nick Cooling's volume price analysis, the link is in the description below this video. I recommend you reading this book because, again, until you study price action based on volume and then learn to analyze it, it's not that hard. So where are we at? Again, you take a stab, because this is the first sign to me of accumulation, because if you read some of the data going on in the market, we haven't seen this big of a move in the bond market almost in, I can't even remember, 40, 50 years. So does that mean we can't go lower with the TLT, higher with rates? Absolutely not. But, I mean, the market is the market. However, I am starting to see short covering and accumulation. Saw that down here, as you can see, and we popped, but it was short-lived. So we'll see. Someone's covering down here. Someone's taking positions. Check out the monthly again. We're at the 200 month. I'll be amazed if we close below the 200 month on the first touch of it after the recent action. Because again, what I always tell people, the straight line move is near the end of a move, not the beginning of it. See the straight line move, straight line move, straight line move, straight line move. See, they typically lead to counter trend rallies. Hence the all or nothing trading style, and layering in, layering out helps you take gains as something rises or drops, depending on if you're a short. Anyway, that's what I'm watching. Watch the 113, 112 12 level. A lot of good friends of mine in the Discord room have ideas on price levels. We all think somewhere in the 112 to 113 range. It seems very viable. For the downside, keep in mind it would be, what is it? The 2 times range lower. Let me confirm this again. Again, I do not, this is not my trading computer. Oh, yep. Here you go. That's the 1 time up. Here comes the 2 times down. So that's a to 111.26. That's not close, but $2, I guess. But my feeler bet, I'll stop out way before I touch 111 if I need to. The dollar. It looked like distributive action up here. And we talked about one of the things. One day doesn't make a trend, and also doesn't necessarily mean it couldn't just chop for a little bit. We've talked about the dollar again. We're going to zoom out on the weekend recaps so you can see how I look at trades. No matter what trade I'm looking at, I start on the monthly because I just want to make sure I'm not seeing things incorrectly from a bigger standpoint. Is there a bigger trend? Right now, this thing is compressing. If it fails up here, fine. If it breaks out, it looks like it's going to go higher. And when I say higher, I mean significantly higher. If the dollar goes significantly higher, do not be surprised if the markets really get nuts. And meaning nuts, I mean maybe commodities actually start to pull back because CPI has peaked near term because demand destruction from oil, all the commodities. I mean, you can't sustain higher commodity prices with demand destruction based on lack of wage growth. Let's be honest, there's no wage growth going on right now. So the higher the commodity prices go, it's very reminiscent of 2008. The higher the commodity prices go, the weaker the consumer gets. And as the weaker the consumer gets, the demand destruction comes down. And so then all of a sudden, when oil, say for example, 2008 hit $150 a barrel, everyone just stopped driving. Are we at that point? I think we're at a price level where people are slowing down dramatically. Stop driving? No, I don't think so. But around the world, I think there's just people are figuring out ways just to not drive, not travel, not do. And that's why I think ultimately there's no management of a soft landing with interest rates in the Feds. I mean, they're in a pickle. So here's the thing about the VIX. I talked about the 20-day when it backed off. Notice how it hit our trend line perfectly. Again, I drew this trend line based on this level. It hit it perfectly. Wasn't surprised it backed off. Now again, in a bear market, which I think we are in, every day is not up. Keep in mind, bear market rallies can also be very strong, bullish, near term. At a 20-day, I think at some point we are going to capitulate much higher because everything I read on Twitter, everyone's like, I'm buying the dips, prepare for the bear market rally, prepare for this. It's like, man, everybody can't be right. And when I say everybody can't be right, if everybody's anticipating a bull market or a bear market rally, that's just not how it works. That's just not how it works. You know, always keep in mind, like, everybody can't be right. And so if that's the case, I'm not believing it yet. I don't think we're anywhere close to the bottom in the market. Now, it doesn't mean it can't rally for 2 or 3 days. I hate when people look at one day and they go, oh, look, green day, the bear market's over. And it's like, All right, and we honestly called a lot of those days correctly as green days or doji days. Again, Fed days, we talked about that being a trap, and then it went up, and then the next day it crashed. We talked about Friday being a doji. I know the market mechanics, and so one of the things that I look for is the sentiment. And at this point, as I watch the VIX, it seems very likely to me that it's gonna go spike up. And when I say spike up, let's look at the levels. At worst, I mean, I think you got to get back into the 38 level. More than likely, you're going to get up into the 40s. I mean, and even in the 40s, and that's why I was trying to like move around as we were talking. Like the 40s isn't crazy. Like crazy's up in the 80s. And keep in mind, in 2000s, I mean, you got into the 40s multiple times, and look at the levels you made higher highs on the VIX. And I've said this multiple times, thinking this is a bear market for tech. What are you making? Higher highs and higher lows. And again, I would probably be looking for like June for everything at least to wash out by then. All right, is what it is. Let's not waste too much more time. Just be aware. Do not get comfortable with this market. Do not start buying stuff until you see a capitulation. And a capitulation means what? Panic. I am not seeing panic in VIXs in the 30s. I mean, I'm talking VIX in the 40s or days where your favorite stocks are just, I'm not going to say favorite, your tech stocks are absolutely getting obliterated. And then they reverse. We haven't seen that yet. I'm sorry. It just is what it is. I hate people to, get emotional about it, but that's how I see the evidence. The SPY. We talked about the Feds this week being a pop and a flop. Pop. Here's your flop. Again, we have people like, oh, double bottom. We're at the range lows. All right. Fair enough. I mean, no one's going to argue that. Doji. Oh, could we hold the 20 month in red? Let's thicken that 20 month up. Okay. I mean, again, I can make the case for anything. That's why trading so hard. The psychological part is you can make a case. It's what's the probabilities. At this point, if you zoom out and you see like the bigger formation is what? Head and shoulders top. We're right at the range lows, should be looking to spill lower. That should be your capitulation. Now, where does it get to near term? We talk about this all the time. It seems 400 at worst. At worst. And if you're going to overshoot because it's a panic-driven reaction, I mean, do the math. Let's take this out. And again, I have multiple chart timeframes to do this on. Let's take the COVID lows. This chart, let's just go to the weekly. It's a little cleaner. Apologize. Come on. What are you doing? There you go. Here we go. The COVID bottom. Where's the first bottom? It's probably at like 380 if I had to guess. I would put it at the 0.382. That's a fib. Congestion zone. Why is my volume at price not showing? Yeah. Do it later. You got a convergence of all these trend lines. Now, also, don't be surprised. Head and shoulders top resolves even could get down to 350. So in your head, that might seem far away, but it doesn't really feel that far away, because if you're going to get a blow off, let's zoom back in. This action is VIX smashing as it like goes sideways. And again, VIX smashing mean like you're not getting capitulation. So again, it could walk its way down slowly, or it could just get blown out. Either way, I think the market's showing you that shorting is the trade. Now, again, there will be a bear market rally at some point, like this kind of crap. But what is that? What is your long-term strategy, and what are you doing? Just be safe. That's all I really can end it on. I don't trust it. I think you can short pops. We'll identify the blow off when it happens. You have CPI next week. I don't know if that's going to be a blow off event. Qs. I mean, same kind of thing. A head and shoulders top with worse right shoulder, a much lower right shoulder. You can see it down here. You would think you got back up to here. We couldn't even do that. Where are we going? Well, let's start on the monthly. Nike, you're below the 20 month. I'm telling you, 260s. Like, put this down in your notes, and I'm writing it down again just to always have, because I like to have this stuff immediately everywhere. If you can get down to Q's 260, and I know people are like, that's crazy. I never seen a move like that. Well, then you've never seen the past, because there was a time when the Qs in a month corrected almost 50%. We were like, what the hell are you talking about? From that date down, it was almost a month, and you went from 120 down to 63. Almost 50%. Then you had a rally, then the death, slow and dying death. Now again, do you want to own this stuff for the long run once the trend breaks? No, I don't. Now, again, what do we talk about? This is a nice uptrend. You got a nice uptrend. Straight line move. Boom. That's the end. That is the end. I mean, if I'm wrong, which ultimately I can be, that is what it is. But I mean, I posted this, where is it? I don't know if I dropped it in the Discord room or not. I'm going to do it as we speak. All right, we're back. Here's the photo that, oh gosh, we need to blow that up. I don't know how to stretch it out. Either way, you can see how from 1916 to 1929, the market went like this. Here's 2000 to 2022. We entered the Great Depression. Are we entering the Great Depression? You really can't bet on that, but you can bet on weakness. I mean, I could see a significant correction. So, know all this stuff ahead of time. Be safe, be smart. I don't trust tech long term. If you want to come and debate me on this, please feel free. I've been trading a long time. I've seen markets flip from bear to bull, bull to bear, bull to bear. It is what it is. Tech leads one market, the other one is commodities and housing and stuff that does better with higher interest rates. At this point, higher interest rates are here to stay. I don't think the Qs are going to do well. That's just my reality of what I've seen things. And again, you can argue how you want, whatever. IWM, look at this chop, breakout, fail, bull, bear trap, bull trap, going lower. That thing is so ugly looking. And again, because IWM leads. This is much, again, IWM, smaller cap stocks that are much more economically sensitive. How do they look? They look bad. They look really, really bad. The evidence is pointing to a certain outcome. The thing that I've talked about continuously about the market is that the Feds have things that they need to accomplish. At some point, they need to get interest rates lower. How are they going to do that? Think about it. Just think for a second. The first thing they have to do is they have to get commodity prices under control. And we say commodity prices under control. We need to see a commodity smash. They can do that. They literally can call up the CME tomorrow and all of the futures exchanges say, hey, raise the margin requirements on oil to whatever percent to get people to start liquidating oil futures, liquidating wheat, liquidating corn, liquidating whatever. When this happens, they will try to knock the prices down. It will be ultimately, how successful is that? Probably not going to be. Near term, that is the first step. Then they need interest rates to go down because people think it's deflation. Then obviously the market will capitulate. Then you can feel better about buying your favorite stocks. Will they reinstate quantitative easing? Again, these are all things that people conject. Let's just play it out. You know, all this stuff at this point is really hard to predict. And I'm not going to try to read the Fed's mind, but I do know that they have stated very clearly they need inflation down. They need to raise rates to get inflation down. Well, guess what? If they can just knock inflation down by creating a quasi market crash, why wouldn't they do it? It's much simpler than buying bonds. Gold, tell them people, just stay away. Just please stay away. Gold is not showing you that inflation is coming. And everyone's like, whoa, inflation's here. And it's like, yeah, cup and handle long term. I get it, friend. I get it. What it's telling me near term, though, is let it come in. I've been saying 160s, 170 area. That would be my guess. 164, 170 area. Let it pull back. Because again, at this point in the market cycle, if you study the 2000s, gold was incredibly volatile in 2001, 2003. It was not breaking out because there was periods of inflation, deflation, back and forth all over. And what happened? It just chopped out before it led to a big move. Well, what's the darn difference now? Chopping out since 2020 for a bigger move with the cup and handle. I mean, again, and people are like, whoa, you're going to miss out. No, I'm not. Because if it does break out, I will buy in gladly. And I know there's unlimited upside, meaning gold could go absolutely bonkers higher. Silver, same thing. Friends, I know it's in the no-brainer buy zone. I'm not even touching it. Why? Again, because I know silver. I know silver. It loves to do these like breakouts, break belows right before it goes higher. Doji, red candle, boom. I'm telling you, wait. Please, for the love of God, let it set the bear trap. Let every puker of bull silver, because again, if you look at Twitter and you look at social media, not a single person is bearish silver, and that doesn't work. That's not how you bottom. It's just like when the market's rising. You don't rise. Like if everybody's bearish and the market's rising, it usually goes higher. Same thing here, friends, with silver. Wait till the friends that you follow on Twitter just go, I'm sorry, I lost everyone money. I have to shut down. I need to take some time off. I don't understand what's going on with silver. I've bought so much. Again, silver, gold, uranium, whatever commodity is. These people on social media who continues to say, buy the dip. Oh, I'm down 40%. I don't care. I'll be up 500% in the long run. It's like, no, actually, after a 40% correction, do the math. It's much harder to get your money back after losses. So what do? You wait. GDX, same thing. 2930 area. I'm going to try to wrap through these quickly because there's really nothing to say. They're all very similar. Like, let them come down to you. GDX, 38, 37, maybe. Even better. I mean, the lower they go, the better. I mean, that's how I look at it. AG, we talked about this not breaking out when silver was going higher, and it's like, right back to the price. At this point, it looks like it's going lower. Look at this thing. I mean, maybe in the 8s, 750. What? That would be an absolute gift. No one's saying it's not. AEM. Same thing. Great earnings. Look at this. Earnings day. It popped. Earnings gave it all back. Retested. It's going lower. Now, another great company. 48, 46 level. Awesome. Let it come in. Let it come in. Let's do, this is another name that I really like long term. This is a switch. I'm getting rid of Newmont because I just don't like Newmont. I think Newmont needs to buy someone like this. Newfound Gold. Here you go. This is what I'd be looking for. I would be looking for this action in the 6. This to me is an obvious buy down here. The reason why I like it, recent IPO, holding up well. Pulling back, no problem. Not a big deal. One of the things you have to remember about gold names, miners, know that they have good properties. Eric Sprott is loading the sucker. It's very similar, if you've been following for a long time, to KL. I bought KL before it got bought out by AM. We traded that thing for a long time. It was a great trade. I think we bought it in the 7, 8, 9 range. It got up into the 40s, got taken out. Great trade. I think this is signing up similar. We'll keep an eye on it. Put it in your watch list. Pass. Same kind of thing. Wait for it in the 20s. Let's get into materials names. Where we always start, letter X. X, again, we've talked about wanting to buy this in this blue zone, but we didn't because we haven't seen capitulation. So we let it run. Where can it get to now? I mean, it seems very obvious. It could get hurt. I mean, and when I say hurt, I mean, would it be surprising to see this get down into like 22, 20? I mean, 18. You don't know. They had amazing earnings, and it sold off. The market's kind of discounting a future of worse activity, which I think we all see it coming. It's just how bad. So look for this on a pullback. I like letter X a lot. VALE. Another one we like. I mean, I put the prayer level down here earlier, and now I'm not even really praying for it. I think it's going to get lower. So all these names very similarly. That's why I'm ultimately shorting oil, because I think this kind of weakness is going to pull everything down. CCJ. Again, your favorite uranium person is just totally pumptatious. They just never stop. And again, we told you to sell up at 38. If you've been following, we own the stock. We said watch out for what? Support resistance and the old 50% fib. And after this move, we said it was going to pull back. Now, long term, I'm not bearish, but it doesn't mean I hold anything blindly. Because if I would have just held my gains from 32, 33 blindly, I've now lost 30%. That's not how you trade. We told the more you're up, the less you own. Now you back off. You sold hedges, covered calls. Now what? Watching the 21-22 range. Maybe it goes lower again. Panic selling. Everything could get absolutely just murdered. So is what it is. We're going to insert our new name. Remember, I don't use this computer for trading. This is only strictly videotaping purposes. Arrow. Hello, Moto. This is a solid copper company. Again, copper is not acting well. Dr. Copper, you know, they call that on CNBC. I mean, I've always thought Dr. Copper was a pretty fair name for someone with a PhD on the economy. At this point, what? Look at the monthly. Seems very obvious. Let's draw it all together as you're seeing. Nice little IPO there here at like $5. That thing was a banger. Let's do the closes. Never could close under that. It seems very likely. You see the volume at price node here? See it? Let's just pull this all the way across. Draw it over. So I would say between 12 and the trend line. I mean, that's where I start at. Keep an eye on it. Just watch. If you expect this thing to correct further down, I think you're expecting the right thing. Watch these levels. Now again, start stabbing shortly, carefully down there. I think it's a solid trade. Let's go to Mosaic and CF. People are like, oh, you're crazy to think these are coming down. I'm like, you're crazy not to see it. I mean, this straight line move, head and shoulders top, lower lows, lower highs, it's going lower. Now people are like, you're just crazy. You just see what you want to see. It's like, no, I believe the commodity complex as a whole will take a bath. And when I say take a bath, take a beating. Whatever you want to call it. It's not like I don't like these companies. Please don't get the words twisted. I just know in a bull market or a bear market, anything, you get major pullbacks. People never remember that Apple pulls back 30-40% during its bull market, and they're just like, I just forget about it because it makes new highs. Well, guess what? Someone like us trades that kind of movement. And again, we don't necessarily short the market or their companies, but we hedge them and then we buy them back. And we play that over and over and over and over and over and over and over until we're done. CF, same thing. Here we go. Expecting some sort of head and shoulders top. Going to resolve down. I got the 80s level. Let's move on to the tech wreck that is. AMD, we recommended shorting anywhere near 100. You got to 99. Congratulations. Keep in mind, we shorted up here the first time. I still have a partial position. I did not get a chance to add up here. I was sleeping the day it was. I've been fighting an illness. I've got like a sinus infection. If you know anything about ear, nose, and throat, please text me or stop by the Discord room. I have a constant nasal drip I just cannot get rid of, and it's driving me absolutely bonkers. As of right now, holding the 20-day, the gap did try to fill. I think this is coming back down to the 70 and 80 range. It's just it. If you've been following this channel, there's a reason why I just love shorting this stock, because once it identified the channel high, head and shoulders top. Remember we talked about head and shoulders top, they resolve a lot lower. Look at this thing. It's just been it's been such an easy short, and everyone's like, oh, they got great earnings. Don't care. Fundamentals and stock price don't always correlate. I've told people that endlessly. Like, people can't agree on anything. Do you think they can agree on valuation? Apple, same thing. We've been shorting this thing, and this is such a wild and sloppy chart that swing trading is the only way to trade it for the big money. You can definitely scalp for big money, but I mean, because it moves big, but you got to be quick. Up moves last long, don't last long. Down moves get bought. I mean, it's all over the place. At this point, again, it feels like it's going lower. I've got a third of my short left. Got back into part of it on the earnings day. It got up to 170 after hours. People are like, what are you talking about? You didn't short it near 170. It's like, no, I did. Here was the earnings. We got up here. I put an order in at 169. It filled. It got all to 170. I just let that ride. Again, letting it ride lower. I mean, I'm not all in short because, again, it's not near the highs. I think at some point this will get bought, but I think it's going lower. And again, I want to put my capital to things that I think have the biggest downside. Facebook, this one has been frustrating because I'm trying to short it and it stopped me out here, and then it went higher, and whatever. It's heading lower. I don't know, but I'm waiting for a pop. I tell people I just don't chase. I never chase. If it leaves without me, it happens. But if I can get it near the highs, then I can sit and wait. If I try to short here, I don't know. It could go back to 230, and I still could be right, but I'd rather wait then to short there. And you're like, oh, well, you could have a stop and get back in. It's like, guy, girl, I can't watch everything all the time. I have only so much attention span, and I'm trying to teach people how to trade, and I'm trying to run a real estate business, and I've got 10 screens to watch. It's a lot going on. Roblox, we think at some point this is probably going to get bought out. Now, what price? This is where it gets interesting, because I was looking at some of the like reverse Fibonacci's on this. It seems like we're getting close, y'all. I mean, I think this gets bought out at some point, but does that mean it can't go lower? Again, fundamentals don't necessarily mean anything. Going lower, watch it out. Watch out for it. Tesla, I mean, put this on. I know people are like, oh, I love the stock long term. I think it's going higher. Leave it alone. Leave it alone. It's breaking out of the up channel. If it breaks out of the up channel and the 20-month breaks, this thing is done. This is a unbelievably parabolic strong move. It is not sustainable. Just warning you. People who are bullish long term, you're gonna lose your lunch. And when you lose your lunch, don't come crying to me for lunch money. EXPI, I like it. Great information released recently. Doing well. Killing it. Putting Zillow to shame. But again, fundamentals. It doesn't matter. The market does what it's going to do. I like the stock long term. I'm buying it down here in pieces. This is one that I'm not watching. So I like the risk reward. At this point, I could care less. 12, 13, 14. If I have to, I'll hold it for years because I know what's going on in the company. I think we're going to overtake a lot of the big real estate companies ultimately, and we're doing it better than them. That just seems very obvious. UTHR, talk about this stock all the time being a great trading stock. 200-day fail. Now watch the 178s. Let's get into oil because I think a lot of people want to know about oil, and this is my biggest short right now. And let's start with we'll just throw oil in there as a ticker symbol to part of the video. The action up here, blow off top, chop, chop, chop. Chop, chop, chop. And again, just call it chop. Leads to what? Chop leads to a drop or a pop. Chop is a consolidation pattern. This is the straight line move. I think it's going lower. You're going, oh, you are crazy. Do you not see what's going on in the world? Yes, I see what's going on in the world. Do you not see that this isn't? Yes. I just don't believe there's anyone else left to be bullish oil. Like literally, nobody is bearish oil. The only people bearish oil are who? Let me know. I think I'm alone on this trade, but I also know smart money is unloading up here in my opinion. Because again, at any point, peace breaks out, this thing is going to get slapped. At any point, the feds might come after oil. To me, it has no upside at this point. And I mean, again, people go, oh, it could go up another 10 points. Maybe it does. I could be wrong here, but I think the risk versus reward says absolutely short the shit out. Short the stock, this commodity, because it will lead to demand destruction. The action is not permanently bullish. Again, I think oil long term, I have no clue if we're going to get to electric, but I also do know demand destruction is there. Let's wrap it up with XOP and ExxonMobil, because again, here's the trade based off of the XOP. For DRIP, you have what's called an outside reversal day. Higher high, close below yesterday's low. You had a doji today. I think this is coming down. Again, oil service is peaking. If this is a lower high, oil service leads oil, because oil service stocks, companies know what's going on. You know, keep an eye on it. It looks very clear. Break below 20-day, goodbye. Everyone goes, whoa, 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 whoa. What about the monthly? Yes, this is where the whole trade started. We're at the IPO price, the 100-month, the 0.382, and volume at price node. It's probably ready to take a dip. Keep in mind, it went from 20-something up to 140s, almost 150. That is a huge move. It's time to pull back. ExxonMobil, this is another one you can short, I think. Back up at range highs, blow up top, distribution. Look at the intraday action. You can see, actually, let's change it to 10-minute. Apologize. Stopping power up at the highs. I mean, again, you blow out. This candle probably has more selling. The open previously selling. This candle after hours doesn't matter. Keep in mind, no volume. Again, distribution at the open. There are distributive signals in this chart. And I tell people the 10-minute doesn't, you know, I always say one day doesn't make a trend. Here's why. Again, because if you are the market maker, you're distributing. Aren't you doing it in pieces? You're trying to be quiet, trying to be smart. That's what they're doing. They don't want us, when they're ready to pull the bids, this thing will get absolutely murdered. That's why I love VPA. Anyway, I hope this helps. If you have any questions, again, stop by the Discord room. If you have again, I don't mind a friendly debate. Let's just never make it personal. We can always chat, conversation, friendly. Have a great weekend. Be safe. Hey, thanks for watching. If you have any questions, stop by the Discord room. A link is in the description below. Also, if you'd like to help support more free content, the PayPal link is in the description as well. I appreciate your continued support of the channel.